So we all well know by now that Donald Trump has won the US election on an anti-establishment and populist ticket. And what that means is what he's been doing is trying to appeal to the fears and uncertainties of the voting public and design policies particularly just to pick up on these uncertainties and lure them in. And it's a big trend that's been taking place. It wasn't just with Donald Trump. We saw it in the Democratic primary with Bernie Sanders, who won a lot of support when he was up against Hillary Clinton. And critically, this is not just a US phenomenon either. If you look across the Atlantic and in Europe, you've got a number of left-wing and right-wing extreme parties coming to power or already in power. Some of them still maybe coming to power in coming elections, and they're dominating the political landscape. And when these elections take place and these kind of uncertain outcomes happen, you often see the financial markets react quite sharply. So we need to ask ourselves the question, why is this taking place? And what can we do to try and mitigate against some of these risks? In terms of the why, what we really need to focus on there is economic growth. Economic growth in developed markets has been weak since the financial crisis. You don't have great employment opportunities or strong wage growth. And you've got rising levels of inequality as asset markets have inflated. And as a result, you've got a lot of disenfranchised voters who are not happy with the current status quo, and they're willing to give their vote to these kind of less normal politicians or less establishment politicians in the hope that it might change their current conditions. Looking to the markets, what we need to ask ourselves the question there is why have the markets kind of struggled to predict these outcomes? They thought that Hillary Clinton was a shoo-in to win the election, but yet Donald Trump has kind of come from behind there. And that's a very concerning thing for investors who kind of rely on the markets to be relatively accurate. And the concern there is that the mainstream analysts are maybe seeing things through their own bounded rationality and not being appreciative that you've got a lot of disenfranchised voters who are looking for something a little bit different. And what we're doing here at Investment Solutions is interrogating the asset managers to see whether they understand these relationships between economics, politics, and investments, and whether they're implementing prudent risk management frameworks in order to mitigate against some of these risks and protect portfolios in volatile conditions which might persist over the coming quarters.